Good afternoon, everyone. Before I get started, can everybody hear me? There's a chat box on the right-hand side of the screen. If you can hear me, if you could type in a yes or a Y, that way I'll know that everybody is with me and ready to go. Awesome. So I've gotten some good feedback here, as you can all see. So with that, we'll go ahead and get started. First of all, I want to welcome everybody to the Economic Alliance of Greater Baltimore's 2016 Winter Quarter webinar, and also say a thank you for helping to make this one of our largest crowds for a webinar ever. My name is Patrick Doherty, and I am the Chief Market Analyst at the Economic Alliance of Greater Baltimore. If you've joined in for a quarterly webinar in the past, you're familiar with the format, and you're probably also familiar with our quarterly economic updates. It's what we usually present from. This time around, I'm going to skip the quarterly economic updates and talk about some year-end data from our 2015 regional report. But don't worry, we still do produce those quarterly publications, all of which are available on our website for free. And I'll give you the link to the website when we're wrapping up. The chat box on the right-hand side is also very helpful if you have questions as we move along. So feel free to stop me at any time, ask for clarification, ask for more information. And we are recording this session as well. So any question that you type in now is going to be helpful for someone who couldn't join us live too. So first of all, one of the things to sort of remember as we're going through all of this is that Baltimore and Washington, D.C. are really close to one another. In fact, they actually share a border, or at least the metropolitan statistical areas, or MSAs, do. And that means that workers can commute pretty freely from one metro to the other, and that is entirely unique among the country's largest metropolitan areas. It turns the Baltimore, D.C. corridor into the number 4 largest commuting shed in the U.S. behind New York, L.A., and Chicago. And what that means really for the people who live and work here is that workers have 2 times the options, employers have 2 times the workforce, and residents have 2 cities worth of restaurants, museums, and other cultural attractions at their disposal. So again, it's just kind of worth keeping in mind. So as we talk about some of these numbers, what's good for Baltimore is good for DC, and also what we see positive out of DC ends up being good for Baltimore as well. But specifically, Baltimore has about 2.8 million residents. That makes it the 20th largest U.S. metro. And like most regions that have been really big for a really long time, population growth is relatively slow, about 4.5%, excuse me, about 2.5% over the last 5 years. In part, that's because adding a few thousand people to a 2 million, bottom line number doesn't produce a really big percentage increase like it might in a smaller metropolitan area like Austin or Charlotte. But where Baltimore does shine is in sort of where it counts right now, where everybody's talking about, and that is the growth of educated millennials, or in other terms, 25 to 34-year-olds with at least a bachelor's degree. Baltimore saw this population of people increase 16% over the last 5 years, and if you go back and read our regional report, that number's a little bit different because some of it has been revised with the new American Community Survey 5-year updates. So just happens to be a little bit more specificity once we have these sort of longer term numbers. But still 16% is a really positive number. As you can see, it's well above the national average and it's well above the US metropolitan average. So we're growing faster among this class of young professionals with degrees, faster than the majority of our peers or the other metropolitan areas that we are generally competing with. And so if continued prosperity is really a war for talent, Baltimore is definitely in a great position for success. And again, DC helps with that. They saw a 38% growth in 25 to 34-year-olds with a bachelor's degree over the last 5 years. I see a question from Claire. Claire, I apologize for coming back to that after a few minutes. We actually don't use a teleconference number, so all of the sound is going to be through your computer speakers today. Employment in Greater Baltimore has grown 4.5% over the last 10 years. And I see that Josh is typing. Josh, go ahead and keep typing, and I can answer your question when it comes through. So employment has grown 4.5% over the last 10 years since 2005. That's faster than the U.S. average, but slower than the average of the 25 largest U.S. metros. Josh, thank you for typing that through to Claire. Part of the region's steady growth in employment over the last 10 years, no major spikes, but no major reductions in employment either, is because of the impact of the federal government and what that sort of proximity of the federal government has on the regional economy. In 2013, 12% of the region's total output came from federal expenditures, while the average among U.S. metros is about 4%. And you can see on the timeline, there's no real major spike or major decline in the share of federal output as a part of our regional output, and there's no spikes in the actual real dollars that the federal government output contributed to the region either. That makes our economy somewhat acyclical. It means that we are sort of sheltered from major recessions, although they do tend to hurt, but it's not necessarily as bad as in places that are focused so much more in the private sector. But it also means, by that same token, there's not really an extreme on the positive end either. There's no real big explosion because the federal money generally is a steady stream rather than big influxes of cash throughout the years. So we have a lot of support from the federal government and from the government generally, but most economic growth comes from firms that are less than 5 years old. So what about Baltimore startup scene? First, the rate at which new firms are formed has decreased throughout the years across the entire country. So what we're seeing in Baltimore on this chart on the left-hand side is, as you can see, not atypical. But since 2010, there has been a resurgence in entrepreneurship. Baltimore's startup rate has grown 7% from between 2010 and 2013, and the startup rate is the percentage of firms that are less than 1 year old. So if you've got 10 firms that are startups that are brand new, and 100 firms total in the region, that's a startup rate of 10%. So Baltimore startup rate has grown 7% compared to the national average and the U.S. metro average of 3%. So we're certainly seeing a bigger comeback in entrepreneurship right now in Baltimore than we've seen elsewhere, kind of coming out of that recession pretty strong. You can see there's a big dip from 2007 to 2009 when it seemed like a lot of people were very risk averse and unwilling to open up new companies for fear of catastrophic failure during a big financial crisis. And one of the cool things, in my opinion, about our entrepreneurial community is that our founders generally have a lot of experience. On the right-hand side, you can see what the Kauffman Foundation has called the opportunity share of new entrepreneurs, which is really just the percentage of new entrepreneurs that were previously employed before starting their own business. So as you can see, we're right in there with San Antonio, San Jose, Denver, above San Francisco and San Diego for the number or the percentage of our entrepreneurs that left a job previously to start this new venture. That sort of, that can mean many things, but I tend to interpret it positively as our entrepreneurs are seeing opportunity and willing to take on and shoulder the risk of starting that new venture. So we have a stable economy and a burgeoning startup scene. Must be really expensive to live here, right? Not really, not compared to some of our peers. Baltimore wages are actually among the highest among large MSAs. Median household income in the region is about $70,000, which is number 4 among the 25 largest U.S. metros. And Baltimore homes are considerably less expensive than some of our peers on that high wage scale. As you can see, Baltimore homes, according to the National Association of Realtors Metropolitan Home Affordability Index, are more affordable than Charlotte, Austin, and definitely than Washington, D.C., Denver, San Diego, and Boston. And what that means is that wages in Baltimore, we score about a 180 on this index scale. That means that wages in Baltimore are about 80% higher than they need to be for a person to be able to put 20% down on a home and what they'd be paying from a standardized interest rate level. So homes here are certainly more affordable than in many of our peers, particularly along the Northeast Corridor and in some of the other cities that we're competing with for that young talent. And real or inflation adjusted income per capita is $4,000 higher than the U.S. metro average. And year-over-year growth in real per capita income in Baltimore generally tracks right along with the U.S. city average, or is and as you can see in the early 2000s and then again in 2009, above the U.S. city average. So wages are growing at least along with the national rate of growth, if not faster than the national rate of growth here in Baltimore. And on top of that, Baltimore's a really cool place to live. That must be why our millennial population has grown 16% over the last 5 years. Because Baltimore is on the Chesapeake Bay, we have over 1,000 miles of shoreline. It's what gives us the picturesque inner harbor, but also sailing in Annapolis and kayaking in Cecil County and Queen Anne's counties. We also get over 2,000 hours of sunshine a year. In my opinion, a pretty cool fact. You know, it's not quite Hawaii, but it's certainly better than our Steeler friends from Pittsburgh. And because Baltimore is a hot market, both in terms of the growth of young professionals, in terms of being low cost, in terms of having a very high quality of life, it's a desirable place for people to be, and that's also made it naturally a desirable place for investment, particularly in the real estate community. Our new and expanding firms in 2014 and 2015 generated nearly 10,000 new jobs in the region. And 2015 development, so any project that began in 2015 or was completed in 2015, of which there are 21 major projects, as you can see on the map, consisted of about $2 billion worth of renovation and new construction. And that totaled about 11.7 million square feet of office, warehouse, R&D, and hospital space. And I also want to add that if you're interested in what these projects are, or more information about where they are, there's details for every one of these projects, including pictures, size, capital investment, where we have it, as a part of our 2015 regional report. So all you got to do is crack it open and read through it, and you get to see kind of what's going on around the region. That wraps up our data presentation. Of course, there's always time for questions. So if anybody has anything, please feel free to go ahead and write it in. And if you want to read more, our regional report is available on our website, and the link is right here in the very last web link. Or you can visit our website and check out some of our other research. There's plenty of information there. And if you have any other questions that you don't see answered either here today or on our website, please feel free to contact me. My information is right on the screen. Or you can get in touch with anybody else at the EAGB if you've got more specific questions or would like more specific information. Thank you, everybody. I'm not seeing any questions come through. Of course, I'll leave this open for a few minutes if anybody is typing a novel and has a lot of questions to put in. But please feel free to get in touch. I'm happy to answer any questions, and hopefully we can work together. Oh, so Glenn Rosen wrote in, do we have any information on the number of professionals entering Baltimore every year? Glenn, I'm assuming you mean the number of people graduating college every year. Is that true? Oh, no, the number of people that move in from other areas. I don't have that information directly in front of me, but I can get in touch with you after the fact. If you registered on Eventbrite, I've got your email address. So I can send you a little bit of information regarding the number of people that move into the area. No problem. George, to your point, how about I go ahead and distribute it to everybody that registered on Eventbrite? I'll go ahead and send you a separate email so you know where I found it, but everybody else will get that little snippet of information in a follow-up email from me. Michael Fisher asked if you didn't see it, if homes are so affordable, why so many young professionals are renting? Michael, that's a really terrific question. And it's one that a lot of economists are actually talking about all the time right now because it is a big question. And home ownership is not only sort of a sign, or at least has been seen as a sign in the past of stability and having quote unquote made it or reached some level of success. But it's also one that we're seeing maybe changing attitudes to out of the 18 to 34-year-old demographic. Some people in that millennial age, and I'm just recapping sort of what I've read as far as the academic literature goes. Uh, some people tend to think that that young demographic values flexibility more than they value what has traditionally been seen as a sign of success. And they like being able to, if not move homes within a city over the course of their early professional careers, but also change cities pretty regularly during their early professional careers. That's certainly one explanation, and it might be a part of the final explanation. The other aspect to that is actually one that affects entrepreneurship as well, and that is the debt incurred by attending college today, whether it's undergraduate or whether it's an advanced degree, or in some people's case, both, just adding debt on top of each other. That debt makes it very difficult to get a loan either for a home or to start a business, or really anything else that you would need, a large sum of cash to do right off the bat. So generally, to answer your question, uh, it's both a change in what people are looking for, and also at least early in their careers, for young professionals, an inability to fund buying a home. Sure thing, and certainly that might not be the extent. There might be something else out there. So it's definitely worth keeping tabs on. And I know it's a really interesting problem for economists right now. So I'm sure I'll be reading a lot more about it over the next few years. So George asked if I touched on the type of jobs that are growing in our region. Not in this presentation, George, but we do have a quarterly economic update available on our website that touches exactly on that. And what we're seeing generally, at least over a longer timeline, is that professional, scientific, and technical services is growing. Educational services is generally growing, and healthcare is a steady growth industry in terms of employment. Also, cyclically, with seasons, with the general business cycle, we tend to see growth in retail, growth in construction, and growth in actually leisure and hospitality, particularly over the summer. And I guess I should also add that jobs in healthcare, in professional, scientific, and technical services, and in educational services are generally what we think of as foundational, at least to the Baltimore economy. They're high paying, high skilled jobs, generally very stable employment. So having an economy that's sort of built on that foundation of those industries is generally a pretty good sign. It's generally something that you would want to build on. Okay, with that, everybody, I'm going to go ahead and sign off. But again, if you have additional questions regarding anything we've covered today, or any questions that we didn't quite get to, please feel free to get in touch. I'm happy to help with any questions that you have, and anything that you or your businesses might need.